okay. I'm hoping the broadband lasts this morning. I think the first thing to say is that we all know probably why we want to hear or listen to or watch a business show that helps us given the current competition, inverted commas. So I'm going to try my best over the next few weeks and months, hopefully, to fulfill the dreams of traders and investors.
Fantastic. Now we've got one or two experts coming in to join us today, namely John Piper, David Paul, and Ian Foster. So we'll start with them. But do you want to give a quick update yourself before we do that?
Well, no, just looking at well, there's one or two things that struck me over the weekend. I think I'm a bit of a M&A fan, so Petrofac finally confirmed as being in play in Sunday papers. Small cap that I look at, and I'm very inspired by the world of stem cell technology, hemogenics. That was in the Mail on Sunday off the back of rumours that Oxford University may be getting involved with that technology. So that's a that could be quite a game changer for that area of research. And then obviously the ongoing Brexit or no Brexit divorce bill, which I think James Dyson mentioned on the Mars show yesterday. I think my view is that if we have to pay a penny, I'll be outside the High Court, like Gina Miller, trying to make sure that the British government doesn't pay a penny. So those are my views. I hope I haven't alienated 90% of anybody who's listening at the moment, but we haven't got the money and we shouldn't be paying anything either.
There we are. Well, we're not political, of course, but
well, no, it's just like, but it's a lot of money there, 50 billion, 60 billion, whatever it's going to be. I think we should try and use it for other causes, maybe domestic rather than.
Fantastic. So, by the way, everybody that's on here already, and there's a good crowd, I can see already in. If we could use the chat box for any comments or questions, please do go ahead. We might not be able to get to everything, but we will welcome any comments that you can do, and we can reflect that back to everybody.
Yeah, I think that would be very helpful, because that's one of the areas that obviously we've got an edge on in terms of looking at what traders and the people who are listening or watching want to talk about, rather than necessarily what we think is important. Let's say. Fantastic.
Russell saying he would like an earlier start, actually at 7:45 for the show. Likes Zach, great, and bits of the Dyson interview yesterday was essential viewing on Mar. Yes, it was. I caught that myself. Can we talk about futures, pre-market expectations as well? Okay. Zach, I'll over to you.
Yes, I think. I mean, what I was going to do on a daily basis, we just look at the major markets. This is what I look at this time of the morning anyway, just to see what is going on. As usual, we've got the DAX there on the top left there, 50-minute chart. As usual, that's edging up as it does sort of 9 times out of 10 practically at the moment. Obviously weaker on towards the end of the last week, but this does look again. We're around 13,150 or so. Looks as though it's trying to build a base. So those people looking for a big move to the downside may be disappointed. But at the moment, as I said, it looks like it's going for a base and maybe another a push towards the last resistance there at the end of the week, around the 13,200 plus area. As far as the other markets concerned, let's try and get that to come back. Euro actually also looks like it's basing out as well. What's that, around the 116.39, 116.40 level, and otherwise relatively quiet. Seeing the FTSE that's on the top right there, reflecting the move on the DAX, and dollar yen basing around 113.40. Obviously gives a positive edge to equities as well, but that's relatively dull. I think the only other market which I suppose is sticking out at the moment is pound dollar. Obviously the Brexit uncertainty is not helping it at the moment, but it does seem to be at least relatively firm above the 130.50, 130.80 area. So down quite a lot from the peak of last week. I think I would say obviously on that Brexit factor, but I suppose aggressive traders probably starting to nibble there in terms of the long side. Interesting, that gap there that we've seen, that we saw overnight. Back to you, Simon.
Okay, well, Zach, we have our first guest in the room already, John Piper. People will know of John, having authored many trading books and blogs over the years, the Tactical Trader, the Way to Trade. John's now specializing in cryptos and cryptocurrency, Bitcoin. He has, we're bringing John in first because he's got another appointment coming up quite shortly, so I thought we could go to John first and find out what's been going on in the crypto markets.
Hi, John. How are you doing? Long time no speak.
There we are.
Okay,
So
I'm unmuted now. Yes, Zach, it's been good to see you again. It's been a while, isn't it, since we got together?
Yes, I think there probably wasn't any Bitcoin around the last time we spoke, but it seems to have taken off. I mean, obviously we had this fork. There's a fork issue coming out on I believe, the 16th of November, so just a few days to go. And that's created massive volatility for Bitcoin. What's your take on all this?
John, I think we're hearing John now.
Hi, John. I don't know if you called my question, but the fork on the 16th for Bitcoin, what's your take on all that?
Okay, I can see that John's gone offline. Okay, so maybe run into some sort of computer malfunction. Let's just give John a second.
I've got the chart of Bitcoin here. Actually, Bitcoin's probably the market that I'm following the most at the moment because I'm completely obsessed by the whole concept. I think overnight we had massive volatility there. I think the low there was towards 5,400, which compares to I think the 7,900 peak on Wednesday. So the uncertainty associated with this fork into Bitcoin Cash has affected it, but it does appear that starting on Monday we have actually bounced back relatively strongly. What's that, around 6,250 at the moment, after the gap to the downside on Friday, and presumably I think with the relatively successful launch of Bitcoin Cash, I'm seeing a price, I think it was towards $1,800. The nerves will be soothed.
Zach, it's not Bitcoin Cash. That was launched some months ago. It's Bitcoin Gold.
No, but I mean, I'm seeing the quote of that. There was a good move to the upside over the weekend.
Yes, there was. I mean, what's happening is that people are buying in when there's a fork coming up to get their coins, and then after the fork, they start to go down again. But there was another factor actually last week. The total market cap hit 200 billion. As you know, in the stock market, when a company reaches a certain size, it attracts bigger funds and bigger investors. So money started pouring in. Then this news came out, the fork was cancelled, the Segwit fork, and the market started falling away quite sharply in the event. What's actually happening is a big battle going on here, because the king is Bitcoin currently. In fact, the king's always called Bitcoin, but that honor goes to the most widely mined Bitcoin. So the current Bitcoin could fall, and it's quite slow compared to Bitcoin Cash. If you compare the two, Bitcoin is like a single lane dirt road, and Bitcoin Cash is a six-lane highway. So there's a possibility that Bitcoin Cash could take over. You know, that could become Bitcoin, which is why it's so essential to hold on to your other Bitcoin. You know, the results of these forks, you need to hang on to those coins because they could actually take the laurel. They could become Bitcoin.
But I mean, are you saying that Bitcoin could go down from 6,200 to practically nothing? I mean, what's the risk here?
Well, the risk is limited as long as you have both coins. I mean, as long as you have Bitcoin Cash and Bitcoin, then you're okay, because one or other, people aren't going to take money out of this market. I mean, I've been in here for a year, and there's no way I want to sell my Bitcoin. You know, it's a fabulous market to be in. I've heard people say they feel physically sick at the idea of selling their Bitcoin for fiat currency. And I can understand that. I mean, you don't want to do it. So we're out in the middle of a huge, great boom here, and we're in phase 2 of this market boom. We're at the internet bubble 4 years before it happened, or thereabouts. Yeah, we've had the early adopters come in, the nerds, if you like, and then the smart money is coming in. We're in phase 2 now. The nerds, the rich nerds, and we've got the thundering herd, as it were, heading this way quickly. And it's interesting that there's a video on YouTube from a new fund manager, set up 500 million to put into this market, saying he can actually hear the herd coming. And I guess if he's based on Wall Street, he probably can hear the herd coming. You know, this is a time to be in this market, not out of it.
Well, one question I wanted to ask you, I mean, obviously Bitcoin and all the cryptos are moving much faster and, let's say, better from a trading point of view, maybe too good, in fact, compared to the old markets, you know, the currencies and indices. How do you play them? Because they're like, you know, they're 5 times the speed. You know, is it just lowering your leverage?
Personally, I mean, I just really bought and hold. I mean, I got in a year ago, which was quite late, really, but it was a very good year. I mean, Bitcoin's up 1,000%. Personally, I'm up 2,000% in the year, so it's been a fabulous year. I'm expecting the market cap to go up 5 times in the coming year, so I'm hoping for a 100 times return from my initial very small $4,000 investment to what I'm hoping it was $500,000 next year, end of next year. I mean, you know, and there's many a slip, but currently everything just goes brilliantly. And if you look at supply and demand curves, it just looks better and better. You know, there's no doubt there's more and more money coming in. There's the CME applying for regulation to trade Bitcoin futures and options, which will bring in a whole load more money. And the whole thing is just getting bigger and bigger, and more people getting involved. Yeah, and it's a bit of a no-brainer, I think, right now. But of course, there are these upsets. There are going to be volatility, and the bigger it gets, the less volatility there'll be. I mean, that's true of all markets. You know, the minnows are very volatile, but when they get bigger, it slows down, and that's bound to happen as well.
Right. I just wanted to finish off with your views of the old markets, as I call them. I think I saw your weekend update going out talking about a potential peak in the pound and the DAX. Any calls on that as far as this morning is concerned?
Well, we're currently short pound dollar. We went short a few weeks ago on that. I think we could see a weak pound this week. In fact, the chart patterns allow for one more bounce up, perhaps, but a breakdown could occur pretty soon now on pound dollar. The DAX could have peaked big time. I mean, we are at a point where we could start to see some major peaks coming up. I haven't got a clear signal yet, but we're quite close on the DAX. Similar with FTSE. US markets just keep going up and up. It's I mean, it's going to have an unhappy ending, I think. But you know, again, with no real certainty just yet. And gold's in the wings, looking a bit unhappy right now. But I think within a few months we'll see a major low on gold, I suspect. I'm still running the big call service. So I'm still doing the same old thing I've been doing for many years, where we do cover cryptos a lot more. And I did write a course on Bitcoin. For a meager £37 down, you can get the course on Bitcoin for maybe a 10,000%.
I may do that, John. But just actually, I mean, just that final thing on the price action of these old markets. There was a big move down on, you know, not only the DAX, gold, the pound, as if somebody was sort of pulling out of you know, the sort of the conventional area. Is that the sort of the first sign of something big happening?
Well, I mean, the smart money is going to sell these old markets and buy cryptocurrency. I mean, that's the trade of the decade, I think, probably. But I don't know exactly what's going on. But that's what I'm doing, I guess. In some sense, I'm going to put more money into cryptos this year. But I'm talking to people over here who manage a crypto portfolio, and that's been performing brilliantly as well. It's the place to be, really. And the trading patterns are actually easier than they are for these older markets, more sophisticated markets. You get chart patterns that haven't been working for years on these older markets work really well on these newer markets. So I find it's a good place to be.
Okay, John, thank you very much indeed.
That's my pleasure. It's good to talk to you again, Jack.
Good to talk to you.
And you, Simon.
Thank you, John. Just before you go, one last question from Yat: Bitcoin versus Bitcoin Cash. Is Bitcoin Cash overvalued?
There's definitely a possibility that Bitcoin Cash could take over the crown, become Bitcoin in coming years. I mean, it's a battle. I mean, people aren't going to give up easily. Obviously, Bitcoin has the track record going back some years. Bitcoin Cash is a newbie on the block. But I say it depends on which one becomes accepted as the medium of exchange. Because ultimately, these coins are meant to be used. They are a currency, and the win will be the one that's most used, most practical. And Bitcoin Cash has a speed. So I'm holding both. I mean, I would have actually last week, if I timed it right, I would have sold Bitcoin and bought Bitcoin Cash. I just missed the opportunity that happened. I was on this conference. I was otherwise occupied. But I wouldn't say it's overvalued. I think the main direction is up on both of them. But there will be some adjustment between the two. And as people who need the speed and its transaction speed, Bitcoin Cash is much quicker. They will tend to go for Bitcoin Cash ahead of Bitcoin at the moment.
Okay, thank you, John. Thank you very much for joining us. Our first guest on Round the Clock Trader TV. Thank you for that. Okay, if no more questions, we'll let you go. I know you've got an appointment waiting, so thank you for giving us the time this morning.
My pleasure, Simon. Good to be here.
Thank you.
Bye-bye.
Goodbye.
Zach, we have David Paul also in the room, so when you're ready, we'll be going to David.
Yeah, hopefully he'll give us an equities roundup or an equities angle.
Okay, so David, I think you are unmuted now. Good morning. Are you there?
Yes. Good morning, Simon. How are you, Zach? You well?
Good morning, David. How are you? Good to have you here.
All is good in West London.
Yes,
I suspect, Zach, that if we open windows, we could pretty much shout to each other.
We probably could, but maybe not today.
David, we're doing, as you know, a new format. We're looking for a sort of a short roundup of the equities markets. Are you okay for me to go across screen share with you to have a look at your screen?
Yes, by all means, yes.
Now you get the usual prompt for the presenter role. Fantastic. Now we're looking at the VectorVest front screen. So David Paul is the Managing Director of VectorVest UK. You're looking at the VectorVest platform at the moment, which is a stock analysis and research system. Zach, I'll hand over to you to converse with David.
Right, David. I mean, we've spoken many times. Obviously, it's always nice to try and get narrow the market down to just the most robust type of situations. You do mix fundamentals with technicals. Obviously, you're known as being a very good technical currency trader. Well, I've seen you in currency sort of trading rooms doing that from the seat of your pants. But what's sort of foremost in your mind at the moment?
Okay, well, you mentioned currencies there. I'm short of the pound against the dollar at 132.12 from Friday. There was an absolute textbook Gartley 222 pattern on it. Where it fell and then it came up in a beautiful AB equals CD wave move, and so I'm short from 32.12. I got a bit of surprise at how fast it fell this morning and didn't get a chance to add to the position, but if I do get a chance, I'll add to the position. I think the pound's probably going quite a bit weaker, but as you said earlier, that 130.50 level looks very strong indeed. So down through that, then we're going to see a big move, a weakening of the pound against the dollar, and the dollar looking strong against pretty much everything out there. So that should, in fact, be good for the UK stock market. And the last time I looked in the pre-open, I think it was, the market had gapped up a little bit this morning. So As we go into the trading day, the VectorVest system looks at many market timing systems, but I'm going to talk about two here. The short-term trend of the London market is down. The longer-term trend is up. And as we go into the trading day, in terms of being long of equities, VectorVest does not advocate buying stocks today. Okay, so today would be a day, if you're on the long side, today would be a day to do your homework and to prepare. And that's darn good advice. That's kept me in good shape over the last few years. So I've got quite a few shares that I want to look at, but nevertheless, it's a day to observe and to sit and wait for opportunities on the long side. That said, if I go into my viewers and have a look at all of the shares on the London market that are listed and sorted by the VectorVest proprietary indicator, which is value, safety, and trend, where we put together those shares with the best combination of earnings potential, earnings safety, and trend, all into the one single number. Now, the first share that I want to look at is the MU Pharma, and we've talked about this before, I know. VectorVest believe it's worth 142 and it's trading at £1. We believe it's got an earnings potential, which is excellent, but its earnings safety is debatable. So for those brave investors, let's have a look at it. It's on a buy recommendation on VectorVest. As I said a second ago, it's not a day to buy anything. Because the trend of the market is down, and I'm just hoping my internet is up to this. And that's MU Farm. Recently, we revalued the share as the earnings went up through the roof, and it's been on a buy recommendation for quite a long time now, but it seems to me to be actually settling into a triangular formation here that looks as if it wants to go considerably higher. It had a good day on Friday when the general market wasn't having a good day, and if I got to a 6-month chart, I can see that this market came down, ran obvious stops down around here, and had a nice looking market action here, broken this little trend line, and I would suspect for those brave investors that a position here with stop down here, the official VectorVest stop loss is quite a long way away, but I think you could tighten that up. And for those brave investors in their midst, when the general market rights itself and VectorVest says it's okay to buy stocks, then I think that there's a high probability that that's going to move, could easily move from £1 to £1.40. Okay. So
okay.
That's something for brave investors to have a little look at in the next day or two. The earning, clearly, drugs and whatever, the earning safety is through the floor. So that's the first thing that I think is useful to look at. I'm also looking at Games Workshop.
What's the time frame? Sorry, what's the time frame on this, David?
Oh, I think that when the general market turns back up on the front page of VectorVest will tell us that. But I think in the next day or two that we should see a reasonable move there. Okay.
Right. So it's not something which is a long. Well, because I'm presuming people listening to the show are rather not big on patience, let's say. So,
well, that's what I'm trying to look for this morning. Look for moves that should happen in the next day or two. I'm not talking about intraday trading, although my position on the pound against the dollar was taken intraday on Friday, but I'm talking about 2 to 3 day swing trades, and I'm in fact doing a new course with VectorVest on how to actually find fast moves in the stock market using VectorVest. So Games Workshop, I have a position in Games Workshop, but I'm hopefully going to add to that position. Now, that's my standard layout deck where we've got the price in the normal candlestick format, and the thick green line is the VectorVest valuation, and the blue in the window below the price is earnings per share growth. And you can see on Games Workshop, we get earnings per share growth rising enormously. It's it's gone up from 50p to £1.50 earnings per share in the last year. That's driving the share price. Now, those of you that are technicians out there that think that the market is driven by moving averages, that's rubbish. Markets go up. At least these markets go up because the company's making more money than they did last year. It's pulled back now. If I get rid of the valuation, it seems to be pulling back into this area here. Very difficult to get any form of fib on here. As you can see, it's broken a trend line here, which is not great. There is support here. I would suspect that there's a heap of stops underneath these lows. I'm looking for some form of reversal candle pattern. I think it's probably got a day or two to go here, but I will be taking and adding to this position when I actually see some form of reversal here. The original entry on VectorVest was at £11, and it got from £11 to 22. So there's a bit of energy here, and I would suspect that we're going to see maybe a doji and an up candle, a morning star. Look for the usual suspects, actually. A morning star, a outside bar, a series of inside bars, etc. If I put up our old friend, the stochastic here, we can see the stochastic is significantly oversold and showing what I call reverse divergence, or some people call it hidden divergence. Make that a bit stronger. That didn't seem to do much, but from here and right across here, we've got the price making a rising low. We've got the indicator making a falling low, and that's what is called reverse divergence. It was first noticed by a technician by the name of Andrew Cardwell. It had always been there, but it shows there's a high probability of the trend starting to move up again. Some people call it a slingshot. So it's early days yet, but I would suspect, Zach, that in the next couple of days, if the general market turns back up again and the stochastic crosses down here and we get a candlestick pattern, that we could look for a very high percentage move in Games Workshop on the page. So that's two opportunities that I think should fire during the course of this week, and two opportunities that I'm looking at personally. Victoria, yep. Yes, sir.
No, go ahead. I'm all ears.
Victoria is a share that I think I've spoken to you about it in a previous life, and on my blog I've suggested that people get involved with Victoria, I think 3 times over the last year. It's run up the page beautifully. The last buy signal was at £5. It's now at £7.82. Again, I'm going to take the stochastic off to give us a little bit more screen. Again, we've got this valuation, this earnings per share rising, driving the share price up the page. If I put on our valuation, we now see that the share is in fact trading above the VectorVest valuation. So in my own very, very conservative rule book, I favor shares that are trading below their valuation, because in about 40 or 50 years ago, my dear old granddad told me that the only way to make money in anything is to find the value of something and then pay less for it. So that's sort of very strong on my Presbyterian background. So it's trading it's trading above the VectorVest valuation. Now, many times they just keep on going, and Fever Tree is a classic example where I actually got out of the thing because it was trading above the VectorVest valuation, and then of course it just waved at me and just kept on going. But this was a particularly good trade here, where it gapped out of that trend line, and I think that I've heard you speak about this before, Zach, on many occasions. But if you had to take one trading signal to the desert island, so to speak, it would be a trend line break, and prior to the trend line break, or maybe after the trend line break, you get a gap, and rarely does that fail. And I can't remember it failing in an undervalued share that's growing its earnings. So I
call that the rocket launcher.
Yeah, it's awesome, isn't it? I've seen you talk about it, Zach, with the break
Yes,
out of it.
I'm trying to take the credit for it, but it doesn't really have a name. But I call it the rocket launcher because it is basically, as you said, something which a gap near, at the bottom of the range, a gap to the upside, and it normally has bullish divergence, or is a trend line break, or there's good news, but it just doesn't have that name. But the rocket launcher just seems to be the right name for that particular setup.
I may take glory by association and call it the rocket launcher from now on. But
yeah. I think people don't forget it. I think people don't forget that particular phrase. So.
Okay. I've heard you talk about it as a similar thing through a 200-day moving average. I haven't got the same experience of that, but I know. I remember very early on my trading career going to a seminar that was done by Martin Pring, who's written a book called Technical Analysis Explained, and he said that he'd been working in markets for 30 years at the time, and in 30 years the most predictive thing that he'd found was a trend line. So that's a particularly good setup. Again here, this we have a classic 1, 2, 3, 4, but this looks complete now. So if you were a swing trader, I'm sitting in it. I like that outside bar, was really cool, and it's probably going to go quite a bit higher, but my rules tell me that I shouldn't be adding to this position now because it's trading above the VectorVest valuation. And when you put the fundamentals together with the technicals, you get really, really, really good at being a swing trader, and it's helped me enormously. For the first 25 years, I was trading technically alone because I didn't have the time or the skills to actually keep the fundamentals under control. I have no formal financial education, save what I've had to do recently for the CISI exams, which bloody well nearly killed me. So I've got quite a few more I want to look at here. Volex, you little beauty. We called it on a blog 2-3 weeks ago, and it's going the right way, moving up very nicely indeed. There is the VectorVest valuation at 102. As you can see, there was a line in the sand just here, making a rising bottom, which was always good. Earnings per share is rising, and again, there's a little bit of for adventurous traders, but there's a line in the sand here, and that market has come back. Now, the very interesting thing here, Zach, is that it couldn't come back and kiss those old tops. Now, when I see a market that pulls back and kisses the last old top, that's what Charles Dow used to call a normal trend. But if a market breaks and comes back and doesn't kiss the old high, that's what Charles Dow called a fast trend. And to me, this looks, with that really good day on Friday when the market was falling, and a little bit of a gap in here, maybe let's look at it in a bit more detail. But it looks to me as if that has now got a fairly clean pair of legs from where it is at the moment to about £1. So that's looking very good indeed. So that's another opportunity. So MU Farm for brave people, and Victoria, and the next one I want to look at is Gleeson. Now, the problem with Gleeson, a building company, small, medium starter homes in the middle of England, is that the spread is inordinately wide in this thing. And it's charted a textbook ascending triangle in a undervalued share that's growing earnings strongly. And it's tried once, twice, 3 times, and it broke on the 4th attempt. Now, it's come back and kissed the trend line. So here's what I would suggest. I would suggest that we put a buy stop above there and a stop loss. If this thing breaks up the page through that level, okay, we would get in and a stop loss at whatever the low was. So I would just, let's say that it bounces off this level, which I'm hoping, then it would be entry at 755, stop loss at 715, 710 of that order. So the fundamentals of the share look wonderful, and the technical position looks really, really good, and now the objective is to hone a good entry, and brave people could certainly just buy it here, but I would wait until the general market turns, and I would let the market. My way of handling a test is to let it pull back, kiss, and then reverse. When it breaks the old high, get in up there with a stop loss down there, and that's my second way of handling a trend line. The first way is in fact just with that cap that we spoke about, or the rocket launcher, should I say. So Gleason looks good to me. What else have I got here?
So if we can make this, we're sort of running out of time now, but just one more maybe for luck.
Okay, well, let's have a look then at Taptica, if I can find it. Again, we've spoken about it. I've traded in this quite a few times. It's undervalued. It's got a superb earnings potential. Earnings safety is quite good. If we look at the chart, we can see that there is a line in the sand at about £4, and undervalued, growing earnings strongly, and if I blow it up, we can see that it's busy charting inside bars here. So there is a decision being made in Taptica around the £4 level. It's on a hold on VectorVest. The general market is not great, so if the general market were to move up and we see this breaking up the page, I particularly like this little AB equals CD pattern here down to previous resistance. That's always quite strong. I traded it here out of this textbook flag, as you can see. And that's the really good thing about VectorVest. When you actually take some simple patterns and you trade those simple patterns in the direction of the fundamentals and the long-term trend, my word, you get very lucky. And this moved up the page. If you take that last height and you add it to those lows, it comes to those highs, so that was a good place to get out. And it looks to me as if this wants to move again, but the final part of the puzzle is not in yet. The general market needs to move to an up situation. At the moment it's in a down-up situation, and we need to see this breaking up through these inside bars. So that's starting to look quite good to me. We put the stochastic on here. We can see the stochastic is also showing this reverse divergence formation, where that's making a rising bottom, that's making a falling bottom. That's what Jeffrey Kennedy at the Elliott Wave calls a slingshot. I'm looking forward to another trade in Taptica. TriFast's another company that looks as if it really wants to go. It's had a cracking few days. It came down, took out the lows, took out all the obvious stops, and is now bounding up the page. And I would suspect that there's an awful lot more in TriFast. I really like the look of Morgan Sindall as well. Morgan Sindall was rebuffed at its third attempt to break a high. It's pulled back, and my stomach tells me and my numbers tell me that on the fourth attempt that's going to go, and there's a 30 or 40% move on the upside. In resources, Zach, I'm a little worried. I think that resources have gone an awful long way, that the copper price looks extended, and I wouldn't be at all surprised to see the copper price come back, but just a pullback in the copper price. And if we have a look at one final chart before I really exasperate your patience, is Anglo. It's a share that I know well because I used to work for the Swords about 1,000 years ago. And if we put Anglo American up and we have a look, it's on a buy recommendation. The fundamentals are great, but it's pushing up the page in a rising wedge. As you can see, fundamentals are really cool, but I don't like that rising wedge. So I just don't like that formation, and I think that we could quite easily see a little bit of a pullback in Anglo. It's broken this old high, and it's broken that high. It's dragged an awful lot of people in, and I wouldn't be at all surprised to see it pull back a little bit to, in fact, test their fortitude, so to speak. Maybe for those people who are brave, there's a small shorting opportunity in Anglo. In my core portfolio, I'm still long of it, however, but I'm worried here.
Right, just a couple of quick points before we've got to leave you, David. First is that the stocks you mentioned. I mean, I've heard those names quite regularly, let's say. So it implies to me that you know, those are stocks that you'd have as part of a portfolio rather than jobbing them out. they seem to tick the box, both the technical and fundamental boxes in a consistent way. Is that a fair thing to say?
Yes, I think that a new form is a trading opportunity, but as I said, this morning I tried to put the emphasis on short-term trading opportunities, because I felt that the people who are sitting here attentively listening on a Monday morning at 8 o'clock would be short-term traders. So that's what I tried to find, and it gels with the course that I'm doing with VectorVest at the start of December, which is using VectorVest to try and find 3 to 5 day fast moves in the marketplace, where we line up the fundamental position of a share, the short-term technical position of the share, and the short-term technical position of the overall market, to try and tick all of those boxes and to try and predict fast moves in the market with a high probability. So it's a very exciting opportunity. In fact, looking forward to it. Would be honoured if you came along.
I would be delighted to attend. It's just the sort of thing that I like. The 3 to 5 day window is more than long enough for me. In fact, on that sort of short-term trading note, I mean, what would be your are there any markets, main markets for the day, or major markets you'd be looking at today? Is it the pound? Is it the pound at this level?
As I say, I'm short of the pound against the dollar. I'm looking for an entry in the dollar against the Canadian. Long the dollar, short the Canadian, so that's the two of the main markets I'm looking at. I haven't the FTSE itself looks as if it's come back and to a good place to actually go long of it, but I haven't in fact seen anything that looks to me like a low risk entry at the moment. Okay, so those are my two positions. Short already the pound against the dollar, and looking for an elegant entry in the dollar against the Canadian. And in the stock market,
maybe 126.80 will do the trick, I think, for you on that. But we'll see how that goes. David, Paul, thank you very much for joining us today on our first show. All a bit new and a bit flying by the seat of our pants, but hopefully over the near term we'll get it all smooth as silk.
I've no doubt of that, sir. I've no doubt of that. Zach, it was great to speak to you. And Simon, thanks very much for having me, folks. Cheers now.
David, thanks again, as always. Thank you. Now, we're going to go over to Alan Green, the CEO of Brand Communications, is with us in the room as well. So, Zach, I've handed the presenter role back to you, if you could accept that. We'll look at the charts on your screen. We're going to bring in Alan Green, of course, who you know very well. So we will just unmute Alan's microphone now and see if he can hear us, and we can indeed hear him. Good morning, Alan.
Good morning, Simon. How are you?
Very well, thank you. Thank you for joining us this morning. This is our first our daily show that we're trialing this week, so it's good to have you here.
It's a pleasure to be here, and thank you for the invite. And been listening to Zach and Dr. David Paul there with his many observations. It's been fascinating so far. Very good indeed.
Thank you, Zach. I'll hand over to you, and then we're going to go over to Ian Foster for our final speaker. So we're just about 8:45 now.
Hi, Alan. How are you doing?
I'm good, Zach. How are you?
I'm okay. I've obviously, I'm a fan of your new look and everything else. So presumably we've got that this morning.
Yes, we were debating that last week when we met up at Victoria. But yes, I'm. Let's just say it's a work in progress. But probably best if we leave it there.
Well, no, I think that to say that you look like a character from Scooby-Doo would be fair, and people can just guess which one it might be. But on the stock front,
yes.
I presume you've got some stocks for us to look at today.
I have indeed, yes, and of course we won't mention your hair, of course, which is
as I have said.
And I dare say by the end of the show there'll be a few less as well. But anyway, there we go.
Okay. So
could I just sorry to interrupt again. Could I just throw in a few stocks that have been suggested by listeners already?
Yes.
Morning, I want to touch on them. One is Carillion, and The other is Premier Oil.
Premier Oil, yes. Okay, well, that's a very good. That's actually on my list of stocks to talk about today. Premier Oil. Now, again, I'm going to go back to my colleague, Dr. David Paul. I've been tracking Premier Oil some time, and of course, it's well established that the company had some problems. Not necessarily problems, but there were concerns, I think, in the investment community about how it was going to refinance its debt levels. And just to do a brief fundamental overview of Premier Oil. As the name implies, it's an exploration and development company, and it operates all over the world, in the Falklands, Indonesia, Pakistan, UK, Vietnam. It has a number of well-advanced projects, but most recently, at the end of August, it published a half-year report, and the company has delivered through the year a marked increase in trading and an improvement in production. And indeed, production for the half year was up 34.5%. Cash flows were also up nearly 170%. So it's been a very good year for the company so far. And as will be seen on the chart, in fact, I noted an article on VectorVest. This is going back about a week and a half ago, where they looked at Premier Oil, and VectorVest have discussed the stock previously, noted the opportunity, but it was really at that stage probably too early to enter as an investor. But certainly the stock is now recovering, and I think significantly for investors. In August, the company said that it had completed this comprehensive refinancing program. So I think fears of and uncertainties over finance going forward were put to rest there, and the company raised a further $200 million for the sale of one of its fields. The share is currently trading at around 72, 73p. I need to get my price up. In fact, I'm pulling up now. But VectorVest.
77p.
I'm sorry, Zach.
77.
77p. Okay, so it's maintained that level. Certainly VectorVest and Dr. David Paul had a valuation of over £1, and I think given the nascent recovery in the oil price that we've seen, and I think. I noted David's comments just now about a possible pullback in the resources sector. Oil, I think, is one area where we're going to see a steady improvement, and I think oil is consolidated around its current level and looks set to go higher. So obviously, with the company. With production improving, with cash flow improving at Premier Oil, this could be a very good bet to actually ride the oil recovery. Do you have any thoughts on the stock, Zach?
Yeah, I was surprised there wasn't a better reaction from I believe it was the oil discovery the company made, and the market seemed to be relatively nonplussed. I
think as much as anything else, Zach, this is due to the debt levels the company carried, and obviously with the refinancing now in place. I think we can focus once more on the fundamentals of the company, once more on the actual operational strength of the company, the increase in production and the increase in cash flow. But
they found nearly as much oil as UK oil and gas, I think.
Yes, yeah, which is going some, isn't it? Yeah, It is I mean, it's a huge find. There's no doubt about it. But I think again, there are some perceived legacy issues here from the refinancing program, and probably what we're seeing is the stock is coming back and it's consolidating and improving going forward. But it's going to take some time.
The other point, a lot of our hedge fund friends were also apparently short. Ahead of that announcement of that oil discovery, and they haven't really wanted to get out of the position either.
It's a heavily shorter stock, and as you say, if traders are seeing that these positions are still in place, then they may sort of view the stock as overbought, and possibly the stock could consolidate and correct a few months hence, but the chart to me looks pretty solid. I mean, we've seen a pretty steady recovery since the summer, and the stock's building nicely. It's delivering solid support at or around 65-70p. So there's good floor there. So we may see a fall back to that level, but so far since July, in any event, we've seen a series of higher lows, which I think you'd agree with the chart, Zach. It bodes fairly well.
Well, I was going to say the rocket launcher formation I was discussing with
Yes.
with Dr. Paul. It was actually there on this chart from July where it gapped through I think that's the 50-day moving average, and it never filled that gap. And we've actually seen good progress since there. So it does actually.
Yeah.
Look quite healthy.
I'm glad to see that you're adopting rocket style or rocket science parlance into trading terminology. That's a big step forward. So clearly,
Probably on a very small scale.
Yeah, that's right. Yeah, once you start talking about orbits and so on, then we can take a different view. But no, I absolutely. I think you've got a rocket launcher potentially on the launch pad anyway there. So, I think that there may be some corrections going forward. But as we see those hedge funds unwind their positions, I think we can expect to see Premier go back. We're looking at the start of the year, the stock was nudging on £1, and of course that's where VectorVest believe the current valuation lies. So as we move higher, I think we can expect to see VectorVest, I think back in March this year, had a valuation around 120, 130. So that's worth noting, because clearly the company saw value at that point and or appeared to display value at that point. So
Chaps, I'm going to just give you a comment from Russell Jones, who's been very active on the message board this morning on Premier Oil. He says, is Premier Oil not gaining positive flow, as like other small cap oils such as Hurricane have screwed investors by poor management, rights issues, etc.? Why not buy BP or RDSA? Still positive upside and great dividend mix.
Well, thanks, Russell. That's a really good point. I was going to mention RDSB because I'm a long-term holder of our RDSB. In fact, I bought the dip which was driven by the oil price a year to 18 months ago. And on Wednesday this week, RDSB goes ex-div. So if you want to jump in now and grab the div, then now's the time. The stock's trading, I think it's just under £25, and I know prior to the oil price driven dip, a lot of investors were still had bought in at that level and were very bullish at that level. So when's a good time to buy? I think just going back to my earlier point, looking at the ongoing recovery in the oil price, I think Shell is so well placed now. It's absorbed BG Group, and it's such a vast entity. And also, let's not forget, this company's paid a dividend every year since the Second World War. So if you're a buy and hold investor, this is a great stock to own.
Since you were born, Alan.
Yes, indeed. Yeah. Yes.
Fantastic.
Yes. Well. Yeah, since my birth. There you go.
Just wanted to go into. I don't know if you've got any comments on Carillion, or you had another stock to go through, or is that?
Yeah. I have another stock to go through. Actually, this is a stock that maybe not as of yet isn't on investors' radar. It's a small company. It's worth £50 million. It's a company called Prairie Mining. The EPIC code is PDZ, and this is just. David mentioned sort of earlier the possible pullback in the resources sector, or I would say possibly a minor correction is due. But Prairie Mining are in coking coal, and they own two large coking coal projects in Poland, namely the Jankarski mine and the Debiansko hard coking coal project. Now. The Jankarski mine is well established and is viewed by the industry as one of the most advanced coking coal projects in the Northern Hemisphere, and the Prairie Mining have a joint venture there with China China Coal to develop the mine, and obviously the coal will then be produced and taken forward and distributed through the channels the company has. But the company has a good-looking chart. If we look at the chart of Prairie, we'll see that the stock has gradually been building since the lows of just above 20p. It popped up above 40p briefly in February this year, and it dipped back just below 25p during the summer, and it's building nicely. And I think we're seeing a series of higher lows since that point. And indeed, Zach, the support lines on the charts do look very positive for the stock. Do you have a view yourself as a chartist on this?
Well, I have a view on everything, as you know. Here we have basically a rising 200-day moving average since the autumn of last year. We just bounced off that a couple of times since then. So it looks as though the uptrend remains. Good consolidation in recent months as well. So hopefully we'll get back to that 40 pence area relatively soon. Indeed.
Well, I think there's clearly, for a balanced portfolio, you'll want the large dividend paying stocks such as Shell, and if you're looking at the mining stocks, possibly Billiton and Rio. But every resource portfolio should include a smaller play like this. And Prairie, whilst coal is nothing new, I think if we look at the appetite of countries like China and developing areas like India and Brazil, the appetite for raw resources, coal drives steel production, and steel production is anticipated to increase quite dramatically in the next 18 months to 2 years. And of course, coking coal is required to fire that production, as it were. So this company's Prairie Mining's in a very good place strategically, and the mine is, as I said at the start, one of the most developed in the Northern Hemisphere, and it's really the go-to mine for steel producers needing quality coking coal. Okay, Alan Green from Brand Communications. Thank you very much indeed. Thank you, Zach. Thank you, Simon.
Thank you, Alan. I really appreciate that. Okay, Zach, we are increasingly running short of time. We have one more speaker to bring in this morning. Before we go to Ian Foster, is it time to short house builders? Russell's asking. Do you have an opinion on that?
I think it's one of those situations where basically there have been so many false sunsets in the house building sector. I would really wait for it to be so obvious you don't have to ask the question. I think that's the moment there are pluses and minuses on it. Every time you think it's the house builders, they're gone, they're going to be killed by stamp duty or whatever, they bounce back. Supply and demand issues, etc. So I think the trade has been to buy on dips, and I would probably continue to do that, even though it looks as though it's getting a bit painful to do so.
Okay, thank you. Now we've run over our time limit, but I'm pleased to say we've got another speaker coming in, Ian Foster, our price action trader. I'll just unmute Ian's microphone now. We can bring him in. There we go. Ian, good morning. It's Simon here. You should be able to speak now.
Morning, Simon. Morning, Zach. Yeah, I can hear you loud and clear.
Super. Thank you. Sorry to keep you waiting. We've run a little bit over our time slot. This is a trial event, as we say, so we'll be taking all the timings into consideration. But good to have you here, Ian Foster, price action trading from beawinningtrader.com. Zach, I'll hand over to you. Ian, shall we cross to your screens so you can put up a couple of charts?
Yeah, that's fine, yeah. Can you see them?
Okay, yes, we can see the screens.
They look beautiful.
Yes?
Okay, Zach, I'll hand over to you and let's have a look, see what we're looking at.
Hello?
Right, Ian. Yeah, ready to go. Just we want to hear your words of wisdom. I'm agonising over pound dollar at the moment. Have you got any wisdom on that?
Well, as we all know, it has reversed heavily since the open last night. So much so from a price action perspective and a daily on a daily chart, especially in a daily chart perspective. We had a bullish bar on Friday, Zach, and you see what's happened today. It's immediately down and broke the low. Now the low of Friday was 131.11. So technically, it should have taken the high to the upside out first, as far as analysing one single deal bar on the pound-dollar cable market. So with it breaking that, that actually turns that round quite bearishly, so to speak. But as I said in my analysis over the weekend that I sent out, that the weekly bars, the weekly bar of not last week, but the weekly bar of the week before, but more importantly, a weekly bar that's going back about 6 weeks now. And it was a very bearish weekly bar, and what that means is that you have a much greater probability of the market breaking to the downside, and that low happens to be 130.26. And the high is 134 dead. And again, we had an outside vertical bar 2 weeks past where the low was 130.38 and the high of 133.20. So although in my analysis over the weekend I said, look, the daily bar is bullish, which is indicating perhaps strength at the beginning of the trading week, we have to be very aware on cable that we have a 133.20 level to hit. Now, as we all know, it just shows you that you can only trade what you see in front of you. As we all know, it is very quickly turned round overnight and into this morning, and now trading at 130.70. So yes, I reckon that cable will go down and achieve these bearish price action objectives on a weekly basis and break this 130.38 and subsequently then 130.26. That is what I'm looking to do, and then that will give it a clear road that then can do what it wants to do. So I'm certainly seeing bearishness, and if we flick over just to my 5-minute charts in the software, 15-minute guidance chart below, and 5-minute trading chart, you can see blue bars during the night. Quickly this morning here, just after 6:30 p.m. has turned red, but all during the night the guidance chart, the larger time frame chart, the 15-minute chart has been in red mode. So exactly as we speak, we are certainly in red mode as far as cable goes, which again, that's only playing into the larger time frame. And just to look at the bigger picture, we can see the 60-minute charts have now went red. We have also got on the 240, the 4-hour chart, which I know a lot of traders trade. We had a very good bar trading pattern low here of 130.85, and as we've now broken that this morning, we've technically changed trend even on the 4-hour chart. Now, admittedly, the bars haven't turned red here to further confirm that signal, but it is certainly once it broke 130.85. So cable definitely short. Target of 130.26 is my look for cable. Euro dollar slightly different. A week this morning again with quite a bullish bar on Friday. No, that's a weekly bullish bar on Friday. If you look even into the monthly charts, you can see that there's further weakness in the bigger picture in the euro dollar. Actually, more weakness, I believe, than in cable. But certainly in a shorter time frame, we can see that although it has turned this morning on an hourly time frame from the blue color of the bars indicating strength to more neutral position, and again looking at a 5-minute chart, you can see we have red bars admittedly, but at this minute in time, yes, there are perhaps short signals on a short time basis because you've got a 15-minute chart, but on a weekly basis there may be more strength. There may be more strength in the euro dollar as compared to more immediate strength, I mean, as compared to cable. Sorry, Zach, go on ahead.
Just so they're sort of relatively muted. I mean, the main trade there is probably waiting for cable to break down, isn't it?
Well, it is. It's in the process of it. You know, breaking that 131.11 this morning has been that is quite significant from a price action perspective. And again, as you say, you know, you look at the larger time frame charts. And why do you look at larger time frame charts? It's like if you can imagine magnets, and The stronger magnet is the bigger time frame chart, and you've got a weekly chart that's not only 2 weeks past. Last week we traded inside. It was an inside weekly bar last week. We traded inside the large range day, which was an outside vertical weekly bar to the downside for the week before. A very strong technical indicator that that market should certainly break lower, which is 130.38, before it should break higher. And again, with breaking that 131.11 this morning, coming out of a bullish bar, breaking the lows when it should have technically broke to the upside, that is all just further enhancing the weakness, looking at the bigger picture.
Okay. Any other markets that stand out at the moment for you?
There's a couple of markets here. I mean, obviously, we look at the equity markets here, and that's just, sorry, I was just looking, I'm looking to I was short the DAX, and I was short actually over the weekend, but by good luck I brought my stop down to lock in 10 points, which, I mean, I was showing a 40-point open equity gain. So I'm looking to re-enter that, and the reason I'm looking to re-enter it, if you look at the weekly bar again, we've made an outside vertical bar to the downside in the DAX. And the mean of that bar is 13, around 13. So again, if it did happen to go into rally mode, you know, you'd be looking for an intra-week short, but I mean, technically it should break this 13.106 to the downside. And the FTSE is exactly the same. Ignore this little bar here, folks. This is today. The FTSE is trading so far within the range of Friday's bar, but when you look at the bigger picture in the weekly chart, you can see it's exactly the same price pattern, which doesn't often happen. Well, I'm not saying it doesn't often happen, but in more recent times it hasn't happened so clearly. But we have an outside weekly vertical bar to the downside also on the FTSE, giving us a high probability that we'll break the lows of 74.20. So again, it's a matter of looking for some short positions setting up. There has been red bars just starting to appear here. I'd like to see a bit of a retracement, and perhaps there's going to be a shorting opportunity on the FTSE. I know there's one market you've been looking at, Zach, and thanks to you, I've been starting to look at it reasonably closely since our brief chat in London, and it is the Bitcoin market, and it's just been phenomenal. Trading the Bitcoin, for those of you that perhaps have a bit of an interest in a trading perspective, rather than actually holding the currency as such, my software in Bitcoin has absolutely been phenomenal. Now, we all know that there's and you do, especially Zach, we all know that there is a large spread in Bitcoin, and I'm roughly in my trading so far, the risk is about 130 points. 100 to 130. This most recent trade was a little bit more, but I mean, you can see at our short signal coming off lower highs and red bars at 71.47, and it went down to 56.09. So I mean, we had almost 14 or 1500 points just in this move, just by trading our software. I can go back and show you this move here, where we had blue bars in the market. Yes, it came quickly down. But if you're following. If you're any way of managing a trade, and you're entering a trade in around the close at 72.88, and that market goes to a high of 78.64, over a 400-point move, and you can't lock in some profits, dare I say it, and forgive my cheekiness, you shouldn't be trading. We had some fantastic, we had another 1,000-point move, and this move, the long move up here. We had a long trade at 64.57 and a stop at 63.57, rallied 1,000 points. So I like Bitcoin presently. Presently, as you can see, we've got green bars. That's telling us it's neutral here. So there's no trade on Bitcoin as we speak. But certainly it has picked out, I'm very pleased to say that this has picked out Bitcoin. And as you rightly said, it's a fantastic trending market. And when it goes, it certainly goes.
Yes, it is one of my favourites, Ian. Hopefully you can send on the software at a very prompt date. But thank you to Ian Foster from BeAWinningTrader.com.
All the best, and thank you.
Thank you.
Okay.
Well, I actually just wanted to finish, Simon. I just wanted to finish with what I wanted to start with, but I couldn't get the right data up. Just a review of the stocks, London stocks at the moment.
Okay, Zach, we've come back to your screen, so if you can just confirm, take the presenter role back. Thank you.
Yeah, so just basically the rises and fallers of the day. It's always good to get a bit of an overview of that. FTSE 100 currently around 74.50, which is looked to be the buying zone on the intraday chart. Mentioned that an hour ago or so. So see if that holds. Astra leading the way. Royal Dutch Shell, which was mentioned by Alan Green. Obviously that dividend buying there. People getting in there for that, and BP getting some of the reflected glory of that there. Coca-Cola on the downside, International consolidated as well, I presume, on the going down off the back of the stronger oil price, and Marks and Spencer woes there, still with closing down some of the branches in its in the high street. The other interesting story I saw over the weekend on Barclays was that the software they gave out to customers, the antivirus software, was then used by the Russians to monitor those self-same customers. So that rather backfired. Almost an amusing story, one could say. And then finally, just on the equities, as far as the detail is concerned, I know that the people who are close to the market will be looking at this sort of screen. Canadian Overseas Petroleum down 20%, which will be, I think, disappointing to many on the bulletin boards and on the Twitterati as well. Prospects, a favourite amongst some. That's up there in the volume leaders, and maybe worth keeping an eye on. IQE, one of the biggest rises of the year to date, cooling off a bit, but still up at 160. On the top performers, I mentioned at the start of the show, Hemogenics, which is basically stem cells and research company, or treatment company rather. Shares up there 9.5% after the comment in the Daily Mail, and Borders and Southern leading the pack there, but Hemogenics doing well off that article there. Just on the downside, you can see obviously Canadian Overseas, Toro Track as well, and Kinetic continued woes there. But just that was a bit of an overview of the market, which I was dying to do a bit earlier. I know we've overrun today, Simon.
We have, but only by 10 minutes or so. I think it's been a great first show. So Zach, thank you very much indeed for hosting us today, and thank you to our guests, John Piper, Alan Green, David Paul, and Ian Foster. Tomorrow we are starting again 8 o'clock. We have staying with Bitcoin. We'll be listening to David Cheetham from XTB Brokers, Owen from Two Blokes Trading blog, and Fotis. Now bear with me, Papa Theophanous from Fotis Trading Academy. So that's our three, and maybe some more guests confirming today. But in the meantime, Zach, thanks again for hosting, and we will be back in the morning. So thank you all for attending, and I hope you have a great start to the week.